posting its best month ever. Now, life is relative because we're going to talk about what's happened here, but it finished up 27% in January, but it has been a very rough 2 years for the ETF, down 72%. Joining us right now, first on CNBC, is ARK Invest CEO and CIO Cathie Wood. Cathie, it is great to see you. It has been a heck of a month. It's been a heck of a 2 years. It's been a heck of a 5 years, frankly. We've been talking sort of about all of it. But also, I know you have some new ideas about what's going to happen this year and maybe some of your best ones. But before we get to that, I'm just sort of curious, your broader context in terms of how you're thinking about the market and how you're thinking about your own performance, both in the January period, we've got the Fed, the backdrop of the Fed is part of that, but also just the larger backdrop over the past couple of years.
Sure. I think what we've been through is a very big inflation and interest rate scare that hit long duration assets incredibly hard, including long-term bonds. Last year, the worst performance in the bond market since the 1700s. That's how bad this was. And of course, that was going to really hurt our strategies. But we do believe, and we have been saying for some time, that the inflation is unwinding. We think the market is leading the Fed, the bond market. I think we're down to 3.5% today on the 10-year Treasury bond yield. The bond market is basically saying the Fed is close to the end of this tightening move and is also saying that inflation will surprise on the low side of expectations, which means when we look back that the past 2 years inflation issue and interest rate issue has been a function of massive supply shocks to the system. And I noticed that even Janet Yellen this week said that she believes that inflation is probably going to surprise on the low side and stay there and might even become a problem. Larry Summers, same thing. He's saying, wait a minute, the economy is much weaker than I thought. So I think we're close to the end.
So you think Jay Powell is going to, like, and in terms of the language Jay Powell might use later today, you think it's going to be a little softer rather than sort of a hawkish tone?
You know, I have no idea. I don't know. I've been surprised at how unanimously this Fed board has voted, given how weak its own Federal Reserve Bank districts are, according to their own report. So I don't know. I do know that the market is leading the Fed. And I also know that innovation solves problems. And we have a lot of problems now, including the Fed being so tight and activity becoming so weak in so many areas. So, you know, we put out big ideas last night. These are our big ideas 2023. Very excited. And the first one you see there is artificial intelligence, which, of course, ChatGPT has finally caught the public's imagination. We've been working on artificial intelligence for a long time now, and I think some of the things we're seeing are just the beginning of the impact that artificial intelligence is going to have on every sector, every industry, every company.
Who do you think, though, is the biggest beneficiary or winner of that? Obviously Tesla has been a big investment for you, and AI is a huge part of what they're trying to do. Again, we've had a big debate on this program, and I think in the markets for a long time about whether they're a car company or whether they're a tech company. I know you're in the tech camp, but what do you say to those who say, at least from the unit economics today, that it's a car company?
Well, I would say that it's just even its own gross margin structure would tell you there's something else going on here. Its gross margins are going up. And it's a technology company from the point of view of battery technology. It is at the leading edge there. Artificial intelligence, as you said, Andrew. And I think one of the most important things, you ask who the winners are going to be, they're going to be those companies with proprietary data and large pools of high quality proprietary data. And you'll see many of our stocks are in that category.
Let's talk about some other big ideas. Where are you in the world of crypto? We've been talking about crypto for a long time. I remember you and I had a conversation probably 2 years ago, talked about Bitcoin going to $500,000. You still in the same place?
Yes, we are. In fact, we're a little higher than that in our base case for the year 2030. And in our bull case, much higher. If you look at what has happened in the last year, actually, Sam Bankman-Fried didn't like Bitcoin at all. And he didn't like it because of its decentralization and transparency. And what companies went under, they were the highly centralized, non-transparent, opaque companies. So FTX, Celsius, 3AC, Three Arrows Capital. If you look at what happened to Bitcoin, the network, and Ethereum, the network, they really didn't skip a beat. All transactions were completed. All smart contracts opened and closed. So I think that starting with 0809, which is when Bitcoin really debuted, and even more so after the crypto fallout this past year, the collapse in many companies, this idea of transparency and decentralization is taking hold. And Bitcoin and Ethereum are the two best manifestations of that in the crypto world.
Ask you a different one. Amazon Robotics. That's on your list.
Yeah, Amazon is adding about 1,000 robots a day. And we do believe that robots account, if I remember correctly, if you compare the number of robots Amazon has to the number of employees, about a third. And we believe that by the year 2030, Amazon could have more robots than employees. So we are just at the dawn of the robotics age. And I would say artificial intelligence and battery technology are all a part of that movement as well. Amazon, I believe, has 3,200 robots per 10,000. So I guess that's 10,000 employees. So I guess that's closer to a third. If you look at manufacturing in total, there are only, I think, 140 robots per 10,000 people. That is going to change thanks to breakthroughs in artificial intelligence, battery technology, the sensors that we can now cover robots with so that we can work with them safely. So pretty excited about the robotics movement. And one of the reasons it's going to happen, I think, more quickly than most believe now, is if you look at the cost declines, which drive all of our models, the cost declines in industrial robots for every cumulative doubling in the number of robots produced. The cost declines are in the 50 to 60% range. That's one of the highest learning curves or steepest learning curves that we are watching right now. So pretty exciting.
Cathie, just want to ask specifically how it could, if you could, would you invest in OpenAI, or what are the best AI ideas out there right now? Is it too early? Do you think Google would ever kind of catch your attention more on that front, or Microsoft? I mean, what should the typical investor do? Are there any companies that you guys have exposure to because you like what they're doing in AI?
Well, most of the companies in our portfolio are there because of some data advantage. And I think that's where the secret sauce is going to be. We have a lot of debates about the commoditization associated with artificial intelligence. If you think of ChatGPT, for example, what's it doing? Well, it's scraping the history of the internet, the entire history, and answering questions based on that history. Well, we're seeing a lot of companies move in that direction. And I think the key here is who has the proprietary data. What we just started a private public crossover fund. One of the companies in there is Mosaic ML. And we find that one very interesting because it's actually speeding up an already very rapid transition into the artificial intelligence age. So we'll look for some picks and shovels like that. It's a software company. But I really think looking at companies' data and what kind of proprietary advantage, Exact Sciences, we just published our model and our report, and you'll see what an advantage it has in terms of data on cancer, thanks to its molecular diagnostic testing franchise. and thanks to its distribution around the world. So again, have to look very carefully. I think there's going to be a lot of commoditization in this industry, in the whole artificial intelligence movement, and so you have to look at the data. Many people say, "Oh, data is the new gold," as they were talking about the cloud and other movements in technology. I think that's ever more true now with artificial intelligence.
Or data is the new oil, I guess, is the other one we sometimes share, Cathie. I just want to broaden out again. You mentioned the inflation and interest rate shock that all the markets have gone through in the last year plus, clearly hitting, emerging growth, pre-profit companies that you had owned in concentrated fashion much harder. But, your flagship fund was at 250% a year into the peak. Clearly, there was a huge rush into those names. Is there anything since then in terms of how the market has shown its preferences, in terms of how your portfolio has performed, that's made you kind of revise your approach or think about companies in a different way and how you allocate capital?
Well, I think what happened during that period is time horizons shrank to effectively one quarter, if not looking backwards. We will never do that. We are very focused on the future, on the next 5 years. And in our business, style drift is the kiss of death. So we are going to, our focus is solely on disruptive innovation. I think we're the only company in the investment world with this sole focus. All of our research and investing is centered on it. And if you look at our big ideas on arc-invest.com, what you will see is we expect that the market value of truly disruptive innovation is going to increase from $13 trillion globally today. So less than roughly 10% of the global equity market, to 200 trillion by the year 2030. That's a 40% compound annual rate of return. And the reason it's going to happen is the exponential growth opportunities that we describe and delineate in our Big Ideas report. That 40% seems astonishingly high to most of us, actually, because we've spent the last 50 years in a linear growth world. But thanks to artificial intelligence and the 14 different technologies around which we have centered our research, we believe that we are ready for prime time for not only exponential growth, but as our chief futurist describes, super exponential growth, which means accelerating growth rates. So we're as the world's time horizon shrank to one quarter, we stayed with our 5-year investment time horizon, and we are positioned for these super exponential growth trajectories.
Hey, Cathie, real quick before you go, you're a big investor in GBTC, which is the Grayscale Bitcoin fund. It's about 5%, a little over, actually, of your portfolio. I'm curious how you're thinking about that because, of course, there's a big court date coming up, lawsuit against the SEC over this ETF. Obviously, it's trading far below its real or arguably real value. What do you think is going to happen, and how do you imagine that plays out?
Yes, we have that position is in ARKW, so that's our next generation internet portfolio. Yes, huge discount there that will close at some point. I have no idea how the lawsuit's going to play out. I do think it's good that this discussion is taking place. I think the SEC has dragged its feet in terms of a Bitcoin ETF while approving a Bitcoin futures ETF. It just doesn't make any sense to us. So I think this discussion is going to be a very good one, and the news around the trial is going to be very good for Bitcoin generally, as more and more people begin to understand Bitcoin itself and GBTC in particular.
Cathie, always good to see you. We appreciate you joining us this morning. Hope to see you again soon, in person, no less. Thanks.
Thank you.
All right, coming up, a preview of tonight's earnings report from Meta and a couple of programming notes for you tomorrow on Squawk Box. Bridgewater Associates founder and CIO, mentor,